Okay, hello everybody.
No.
As you've heard, my name is David Harris, and I've been doing research in market analysis, timing the tops and bottoms of markets the last 10 years. I'm going to present to you an update of the work I've been doing, and I think we're at a very pivotal point now. I think a market top is very close. This is a chart of the Dow. Most of the work I do is on the Dow, but I also cover the S&P 500 and the other major indexes. This chart covers 2 years ago, 2013-14, and about 8 months of this year. This is a recap of the last few meetings. So this is as it was in October. We had a signal back in June of last year, which told me that a market top was a few months away. It's a very reliable signal. It's happened about 20, 21 times over the last 100 years since the beginning of the Dow. And when that signal happens, invariably we'll have a market top of some kind. From that top signal, I developed another model which came up with a number of windows of opportunity for where the top might happen. Because the signal in June is quite broad brush. It tells you a top's coming, it doesn't tell you specifically where it's going to be. So I developed the model a little bit. I came up with 4 windows of opportunity. Those are the red boxes marked 1, 2, 3, 4. And those were likely points that the market would top out towards the end of last year into this year. And actually, window 4 carries on into summer this year, so that's quite a way off. But I'm not sure that the market will actually make it to window 4. I was thinking at the time that windows 1, 2, and 3 is what I would focus on. Okay, we had a market high in September, so we knew that window 1 was not the point where the market would top out. In the November meeting, we saw that the market had rallied up from the October lows and had started to form a top in window 2. The Fed ended QE3 at the end of October. That worried me a little bit because every time the Fed has ended its QE programs before, there's been a sharp drop in the market, and I didn't really want to see the market drop at this point necessarily, and I thought it would probably go through to window 3. So I was concerned that when QE3 ended. But what actually happened was the price of oil has slowly been coming down since middle of last year, and that's given a little bit of a tailwind to the market through to year end. So what I said at the last meeting was, as we saw the market go up past window 2 and towards window 3, the chances are we'd see the oil price come down to a low around about now, year end, and then come up this year from sort of January onwards. So a bottoming process for oil. I also said that gold and silver would probably follow a similar sort of trajectory, coming down at year end and then back up into this year. The other thing that I presented last month was that we got a lot of momentum sequences all ending at this period of time, and that also signals that we may very much be at a top in the market. Although this is a weekly chart, this line represents the upward momentum on the monthly chart. The upward momentum sequences last many years on the monthly chart. They're very long, and they show continued upward momentum of the market. So this particular line, the monthly momentum, began in mid-2012, and it's been showing strong upward momentum since that point, around about the time that QE3 began and has carried on. On the weekly chart, slightly shorter time frame, this weekly momentum began early last year, and that ended around about Thanksgiving last year. And on the daily chart, we had a daily momentum sequence come from the lows in October, and that continued up until where we are now. So we have these 3 directions of momentum all coinciding at one point, again indicating there's a high chance we're going to reach a market top at some point. Concentrating just on the daily momentum, what I said was probably we like to see a dip down in December and then a rally up probably into window 3. And I said that we'd probably see a market top somewhere in the 18,150 to 18,500 region. Just at the end of December we got to 18,103, so we're 47 points off that range. So we're very close to that range that I predicted in December. So let's see what actually happened. The market came up into December. That means that window 2 was not going to be the opportunity, so we're now focusing on window 3. We did have that dip down in early December back up as I predicted. As the market came down, took out some of the positions and then rallied back up off the lows in early December. Looking at a daily chart of the same chart, you've got window 2 there, which was from early October to the week before Thanksgiving. Window 3 was from the week of Christmas, and it's through until the second week of December, second week of January, rather, this month. You can see a very definite trend line that the market has hit as it's come off the October low, the November low, December low, sorry, and then what we've just seen the last few days, the market rally off a low just a few days ago, and a very steep climb up from the bottom. I thought that the drop we saw a few days ago was it. The market top was in December, and the market would go down. However, the market's rallied up very strongly. That chart I actually took this morning, so it doesn't actually show how far the Dow really got to. The Dow got to over 70,900, so it's only 200 points short, 200 points short of the overall high. So we are now in a situation where those last few days of window 3, so there are 6 trading days left, that's tomorrow and next week, there is a chance that the market may rally and create one final top just above the December high. So we'll watch that over the next couple of days. There's the employment report out tomorrow morning. If that's very favourable, we could see a couple of 100-point rally tomorrow, and we could see a top tomorrow or sometime next week. Once we get to Friday next week, then that's the end of window 3, and that according to the analysis I've done, would be the last opportunity for the market rally. We could then see a steep downturn after that point. One of the things I've done since we last met was I've taken the technique I've used, which is very sort of high-scale weekly charts, and I've started to employ it to day trading, and I've started to do the analysis on the hourly chart level, so just very small time scales. So just focusing on that drop down in early December. This is a 10-day chart, an hourly chart, so the candlesticks are just an hour each of the period from the 1st of December through until the 12th of December. The market had come down sharply on the 8th, and it rallied on the 9th, and it looked like a bottom had formed. However, the analysis I'd done had this box down there, the red box, which showed that probably the 10th, 11th and 12th was a more likely point that the market would bottom. And in fact, on the right there, that window goes on 2 more days into the next week. There's a 5-day window showing the likelihood that even though the market looks like it's rallied, it would probably continue downwards for the next 3 to 5 days. So let's move forward. The next day, sure enough, the market did come down, and it started to begin through the 5 days of this window. So it's the first of the 5 days of the window. If we go 2 more days on to the Friday, the market rallied a little bit and then came down further. So we're now roughly in the middle of that window. Let's move forward to the next week. On the Monday, which was December 15th, the market came down again. This is day 4 of the window. And then we'll see as I go forward, day 5 it actually bottomed and then rallied off up to December 18th. So that window of opportunity did in fact show the market was going to go to a lower point than it had to when I first did the analysis. And then if you go forward from that, we had the rally up to December 24th. The market topped then on December 26th when we actually got the very top point, and then the market came back down again through into New Year. So I've managed to take the technique that I've used on a much larger scale of weekly charts and apply it just to hourly charts with a similar sort of success. I've also applied the technique as well to other global markets around the world and to commodities as well. So I'll very quickly run through the charts for these as well. I'm looking at Japan, China, India, 2 particular bubbles that are happening in Venezuela and Argentina, and also we'll look at gold, silver and oil. So this is Japan, Nikkei 2000, 225. There are 2 windows of opportunity using the same analysis. One we've passed already, and window 2 looks like we had a high just at the tail end of that window, and the market is potentially coming down now, having reached a peak. That's the last week of December there, just as one more week of data. So again, we haven't gone any higher than that peak. Moving next to China, this was the week of Christmas. Again, we're partly between one large window, window 1, and a smaller window, window 2. Window 1 is looks like it's 3 months across. Window 2 is only a month and a half across. If we move forward to the last week of the year, again rallying up into the beginning of window 2, so we may see the market top in China somewhere through window 2 over the next few days and weeks. India, similar, a very short window, window 1, was way back in the summer, just for I think a week or two, and then window 2 a couple of months, and we saw the market rally up to the very end of window 2. It's reached the top, it's come down from there. If we move forward to the last week of the year, it's come up a little bit from there, but still hasn't come back up to that previous high. So potentially we've seen a market top in India as well. Moving forward to Argentina, the MERV index, huge rally, huge bubble actually in Argentina. I've been watching this since spring last year. I've been building mathematical models to try and recognize when bubbles happen, to try and calculate how high they're going to go. And I've had quite a lot of success in terms of building models that are consistent. And I've looked at different bubbles around the world over the last 100 years, going back to the great crash in 1929, the crash in 1987, and many other bubbles, and applied this model pretty successfully in all of those situations. So this huge bubble was formed in Argentina. It actually got a score of 98 at the top there, so I was pretty close in working out. So anything above about 90%, it means you're getting very close to the top in the bubble. If we actually look at just a 2-year or 2.5-year chart, 2 windows of opportunity in Argentina, window 1 and window 2. We saw the market peak out in window 1. It rallied a little bit into window 2, but nowhere near to reach that peak again. And so looks like Argentina's, that bubble has gone now. It's burst and the market's on the way down. I don't think we'll see it rally up again. Venezuela, similar sort of situation. This has got a slightly different type of bubble. Again, it's a huge bubble, one of the biggest I've seen in terms of measuring the height of the bubble relative to other bubbles around the world. It actually formed a peak at the end of last year. Then it started to deflate, but it didn't deflate fully, and it's re-inflated to an even higher level. As you can see, end of last year, it's been up to nearly 4,000. So you've got those 2 strong drives of momentum upwards. The lower bubble actually has reached a score of 100. That was a very strong bubble formation. And then a score of 92 just recently as the bubble formed at the end of last year. Looking at just a 3-year chart, because that's over 10 years of chart there. We've got 2 windows of opportunity, window 1 and window 2. We're now in the middle of window 1, moving forward to the last week of December. We had a peak just at the end of window 1. Whether we'll reach window 2, it might be very similar to Argentina, where it creates a high for window 2, but not an actual top, just a single high. Oil, you've got 2 windows of opportunity, window 1 and window 2. Window 2, we're there at the moment in terms of forming a low. Moving forward to the last week, we've come down even further. What I've calculated is I think that window will end Friday 23rd of January. So we've got another 10 trading days. So that's tomorrow, next week, and then the 4 days of the week after. And then somewhere in that time frame, we'll see a low in oil. Similar for gold, probably bottomed already, just one window of opportunity there. And then similar for silver, one window of opportunity there. We may have actually already bottomed, and we'll start to see it rally up from there. Very quickly, in terms of upward momentum, nothing's changed since last time. We're still at about the second highest value of momentum upwards. This is a measure of momentum that I created myself. You won't see that anywhere else. The only other time in history that we're higher than that was in 1997 with the currency crisis then. So we're really at a very overstretched position. December, very similar. And just looking at the final scores of where we are in terms of the peak. In October, we only had 1 of the 16 signals I look at indicating a top. In October, we had 5. In November, we'd reached 8, which once you get to about 8 signals out of 16, I'm thinking we're very close to a top. And for December, we actually have got 9 signals. I'm hoping to get Windows signals 14 and 15 turning to a yes. They're very close, but they're no's. I'd also like to see 4 and 7. However, I don't think 4 will be a yes now because the signal there has dissipated, but signal 7 we may actually get. So we could get between 9 and 11, maybe 12 signals over the next few days if we get a peak into the next week. So that's it. Thank you very much.